Hey, good morning, YouTube. I'm James Jackson, and this is Highline Trading. I cover the hottest stocks, but today I want to talk about diversification and how I diversify in my portfolio to minimize loss and increase my gain. Stay tuned. Now, before I get into what I'm going to be covering today, I want to let you guys know that I'm not a financial advisor. Do not take my advice. This is solely for entertainment and education purposes. With that being said, let's get into it. Okay, so the way that I look at diversification is like being given the chance to take one shot at half court for $1 million. But if you miss it, you don't get that $1 million. Or you have the choice to take 1 million shots at the half court for $5. So you are expanding the amount of chance that you have to make money instead of risking it all at once and losing all that money. Now you might be asking yourself, why would I even invest if I'm going to lose most of the time? Well, I'm not saying that you are going to lose most of the time, but I'm going to tell you that a majority of investments you might lose. You have to look at it that way. And if there's a chance that you might lose, you need to not put as much in there and put it into different sectors. Other ways we can mitigate loss are doing our own education and research, really looking at the companies that we invest in and investing in an array of ways. So how can we diversify our money, you might be asking? Well, that's a great question, and I'll tell you right here. You have low risk to high risk investments. Your lowest risk investment you can make is a savings account. However, your return on that won't be that high. Going to the other spectrum, you have investments in the stock market, which are extremely high risk, and you might lose all your money, or you might make a ton of money. So what I do personally is I put majority of my money into lower risk investments. However, I still keep about 10% to invest in high risk because I think that if you do your education and due diligence, you can actually make a lot of money doing that. So each one of my investments has a weight. So I sit down every month and I decide how much money I'm putting towards each one of those categories. So the bulk of my monthly income goes into first savings account. Then I have CD accounts that I put them into, which are a little bit higher percentage than my savings account. And then I put them into an IRA that's long-term and I don't touch it all. So the next majority of my monthly income goes into ETFs. And I don't have a set date or when I put that money in, but I have a savings account. And whenever I see a dip in my ETFs that I am confident in, I put a little bit of money in and then I watch it go back up and I watch my money go back up. On top of that, I look for ETFs that have a high dividend. What's that mean? That means that I'm getting a certain percentage of monthly or quarterly income coming from that company being distributed to me as a shareholder. So the last and final category I put just a small amount of money in is into my high growth stock portfolio. And this portfolio actually makes me a majority of my money, believe it or not. But not because I keep putting a little bit in, but because I do my education and research on these companies, I read the financials about them, and I do my due diligence. So I continue to make good trades. With that being said, do not put all your eggs into one basket and think that the technology market or, a certain company is going to make you $1 million. Diversify the funds and you will see continuous growth as you get older. So stick with me, guys. The purpose of this video is to educate you about how to distribute funds into different types of investments for your future, whether that be from savings to CDs, IRAs, ETFs, and even stocks. If you do it right and you take a certain percentage, starting with the heavy percentage of your monthly income, going into savings and CDs and IRA, and then a smaller amount going into a higher risk investment, you will see steady growth over the years and save for retirement. If you put all your money into the stock market, into very volatile stocks, you might see a huge and tremendous drop, or you could see a huge and tremendous gain. However, I do not like to play that risky, and I do not want to see that kind of loss in my portfolio. So for now, I want to thank you guys for coming out and watching my video. If you like it, subscribe, hit that like button, and leave me a comment down below on how you diversify. So from the bottom of my heart, I want to thank you for watching this video and tuning in. And sometimes we need to actually step back and look at how we need to invest more than what company we need to invest in at the time, so we can actually continue to make money. Thank you for coming out, guys. See you next time.